and then you can easily generate 100 to 120,000 net passive income. There's no immediate need to sell off any of those two assets. We'll look at not the sold section, but we'll look at this properties that have just gone under offer come up, and then you are in a position to buy more properties. So we'll do that review for you even after we've purchased the property. A lot of people have asked me about our process and how we do things. So today I wanted to make a short video explaining how we help clients buy investment properties. So I want to be transparent and explain everything to you so you get a full understanding of what you get as a client if you decide to work with us. My name is Jaddu Srikandan. I'm a buyer's agent for property investors, and I buy properties all around the country using a data-driven approach. So if you want to work with us, then go to my website propertyframeworkbuyersagency.com.au and book a session with me there. So before I get into the process, let me explain a bit about the team and who you would be working with. So predominantly most of the stuff is managed by me. So I do have two other people who are involved in property sourcing. Now, when I say involved in property sourcing, I'm not passing you on to them. I'll still be involved in the process, but I'll be working together with them to get the right property for you. So the three of us will be sourcing properties for our clients. There's only so many agents I can call myself, and therefore I need more people to make these calls or work with agents and close these deals. And that's the role of these sources, by bringing in different properties, talking to agents and closing deals for clients. And then I also have an admin staff who helps me with a lot of due diligence on these properties, which is then reviewed by me before it gets presented to the client. The admin staff is also keeping track of each client and their stage of the investment property journey. So in that way, we are keeping track of clients and closely monitoring where they are at with buying properties. So that's the team, a very small team. When we start, so let's say you go to my website, book a call with me. This is how things would flow. I want to explain that step by step. So the first one is really strategy and numbers. So you might be a first-time investor, or you might be an investor who's already had a few properties and you're looking to build out your portfolio. So that's really sitting down with you and understanding where you're going to. So one of the misconceptions that I often see is that sometimes investors think that they need to be very aggressive, like they need to buy 10 properties in 10 years for them to reach passive income. Sometimes it could be just 4 well-timed assets, $600,000, 4 well-timed assets. And after 10 years, these 600,000 assets have doubled in value. You sell off the residential portfolio, transition into commercial, and then you can easily generate 100 to 120,000 net passive income in about 10 to 15 years. So it could be a very simple strategy, something like that. So that's what we'll be discussing, what we can do to generate that passive income. If you already have properties, then we would put that into system and sheets and see what cash flow position you have, what equity position you have, and how you can move forward. For example, do you have any properties that could be sold to make room to buy other assets in growth markets? So we'll be having that kind of discussion. For example, I recently worked with a client. He had 2 properties, and we just bought a property for him in Geelong as well. He had a property in Sydney that was positively geared, a property in Logan that was positively geared as well because he bought them a few years back. And then we bought a property in Geelong for him. So to move forward, he needed to free up some debt. So the question was, which one should he sell? Should it be the Sydney one or the Logan one? Now, because both properties are positively geared, there's no rush here to sell both of them immediately to buy other properties. So unless he was being really aggressive to accumulate assets, there's no immediate need to sell off any of those 2 assets. But let's say you came to me and said, no, I want to make sure that I'm accumulating assets fast, then I would have recommended selling off that Sydney property, for example, freeing up that debt, and then investing into other markets where you could see more percentage growth coming through. So we'll be having that kind of discussion when we talk about strategy and numbers. That's what we would be discussing. We'll be looking at cash flow for the first property you buy, how much negative cash flow you would be. If you were to buy 3 to 4 properties, how would your cash flow position be like? Would you be in a position to manage this cash flow? It'll give you a really good idea of whether or not buying a lot of properties is feasible for you, when you can actually buy more properties. So a lot of factors come into this when we build out that that plan for you. So the first one is really for you to be clear around the numbers and where you can go with this. So whether you have existing properties or whether you're a first time investor, you'll have a clear picture about this when we do this strategy session. So that's entirely with me. We do it through Zoom calls. It's usually 1 or 2 sessions where we sit down together and discuss this. So once we've done the strategy, the next part is the market selection. So we operate in pretty much everywhere around Australia. So we track the data in these markets, and also we have on the ground knowledge of these markets because we are in regular touch with the agents there, and we know how these markets are moving, because sometimes data doesn't really catch up to what's actually happening on the ground. So when it comes to market selections, we do a lot of research through paid subscription sources like Hotspotting, Hashtag, other general sites where we can get a lot of information about infrastructure projects, the economy, and things like that. And when we shortlist suburbs for investors, it does go through a process. I've done an entire video for this on how we shortlist areas and suburbs for investors, so please go and check that out. We focus a lot on undervalued regions, how to spot undervalued regions and how to buy properties there before property prices rise very fast there. So please make sure you check out that video. There is a process to that. And then we come down to you, right? When we select the market for you, we look at your budget. Of course, that's the first thing that we would look at. What type of cash flow, negative cash flow you can sustain, because different markets have different rental yields, different outgoings as well. So we can look at that cash flow and really see if that would be something you can manage. So we'll look at that cash flow. We'll look at the risk profile. We'll look at your risk profile and see if you're willing to take on a bit more risk, or you're very conservative and you absolutely don't want to take any risk. You want to buy set and forget safe investments. We'll look at the type of property that you want to buy. You want to buy a freestanding house, brick home, low maintenance. Where can we get this with good yields and good growth potential? So there are different factors that come into play here, from rental yields, from short-term growth potential, long-term potential, risk appetite. Different factors come into play when we shortlist these markets for you. Now, we are predominantly buying a lot in Victoria and Tasmania, but that doesn't mean we're not buying in other markets. We are still buying in smaller numbers in other markets as well, but most of the purchases are in Victoria and Tasmania. So when we shortlist a market for you, we talk about some really key features why this is a good investment. We look at the data for these markets. We look at the demand indicators, the supply indicators, and we also look at the future infrastructure and how this region could be in the future and why we think this is a good investment. So we go through all of that with you to make sure that you've got an understanding of that area before we start the property sourcing process. So again, the market selection discussion is with me. It'll be through Zoom calls. We sit down and have this discussion, and once that discussion is over, I'll be sending through reports of the areas we discussed so that you have a clear understanding of the markets that we are getting into. And so once we finalize that, we know the market that we're going to buy into. We know your brief exactly. For example, you want to buy 3-bedroom, 1-bathroom home, low maintenance on a 500 meter square block of land. You want good growth potential. You don't want to be too negatively geared. You want something that's manageable. So once we have that brief, we start the property sourcing process. And so this is where the sources will come into the picture. So they'll be calling agents, they'll be shortlisting properties. We do both on-market and off-market deals. And so when we bring the properties to you, it'll come with all the due diligence checks completed. Now, in terms of the due diligence, it's essentially due diligence around where that property is located. Like, is it located in a purely residential area, or do we have factories, industrial areas, cemeteries, anything that could negatively impact the value of the property? If we see anything like that nearby, electrical substations, for example, within a short distance. If you see anything like that, we're not going to shortlist that property. So we only want to buy in purely residential areas, quiet streets, where the owner-occupiers want to live. We assess what type of properties that locals want to buy in that area, and then we look for those type of properties. We look at factors like public housing, the level of social housing, owner-occupier percentages. Is it a pocket where you find a lot of renters, or is it a pocket where there is a significant level of owner-occupiers, and this is where the owner-occupiers want to live? We look at really more important things like the overlays on the property, any flood, bushfire, or heritage overlays or any other overlay on the property that could impact its value or its development potential in the future. We also look at other things like zoning, easements. Again, this could come into play if you were to do development down the line. We go through a checklist of items before we bring that property to you. And one of the key things that we do here is we tell you exactly how much you should offer for that property to have a chance and how much rents this property is going to generate. So when we do a property valuation and how much we should offer for that property, it's not as simple as just looking at the sold properties and then just deciding how much this should go for. We tend to factor different things like the speed of the market. How fast is this market moving? Is it just slowly starting to pick up? Is it a stagnant market, or is it really accelerating in value? So that's an important factor. We look at not the sold section, but we look at this properties that have just gone under offer, like to see where it's sold at. We talk to agents on where they're seeing value for properties. So we kind of have an on-the-ground understanding of properties in the area, and we're not solely relying on the sold section on realestate.com. So some of these factors come into play. We also look at how much rents this property can generate, because that sometimes plays a small part in the valuation of the property. For example, a high yielding property would be valued slightly higher than a property that would be giving a lower yield. So different factors come into play when we assess the valuation for that property. And so we would let you know exactly how much you need to offer for that property, how much rents it can generate, and you get a video of that property as well. Now, in terms of inspection, to conduct these inspections, we use a trusted local property manager. So they're the ones who would go in and assess the property from a rental perspective. They're seeing if that property is suitable for rent and what it needs to be done before it can be rented out. And they would also confirm the rental amount. So the local property manager is the one who's going to give us that initial feedback on the condition of the property. So if you do like the property, we would go ahead, negotiate, close the deal, and take it from there. If you don't like the property, then we're going to bring in more properties until you're actually happy with one of the properties. So it's a process. We don't have a hard and fast rule that we're only going to bring a certain number of properties to you. We bring properties until you are happy with one. So it could happen as fast as 1 to 2 weeks, or it could take a bit longer. It really depends on how fast we can get something done. So that's the process that happens before we buy a property. After we get the property under contract, we make sure that everything flows smoothly till settlement. We'll link you up with conveyancers, building and pest inspectors. We'll review the building and pest report together with you and let you know exactly what you can negotiate on and where we can request for price reductions or occasions where we can ask the seller to fix items. We'll do all of that on your behalf and take the property all the way till settlement. So once the property settles, the final inspection will be done by, again, that local property manager, and the property settles, and that's essentially where the property manager takes over and our service ends. But we do have this ongoing support whereby you can contact us to understand where your property is at, how this property is performing, whether or not we can sell that property and reinvest into other areas, or you're in a position to buy more properties, your equity has come up and then you are in a position to buy more properties. So we'll do that review for you even after we've purchased the property. So there is a bit of a post-purchase support there as well. So that's essentially our process. I hope it was transparent. Some of the things that I would like to disclose is that some of the clients sometimes come in with expectations that once we have the property ready, I'm not going to spend anything on it. It should be just ready to go. But at times we do find that just from a rental perspective, states like Victoria, they do have more strict rental compliance laws. So sometimes you'll have to spend a couple of grand to get the property rent ready, especially if own occupiers have been living in that property. There are some compliance things that you have to oblige to get the property rent ready. So always keep in mind that you'll have to keep about 2 to 3 grand, a few grand, to get the property rent ready when you're buying in certain states. It could be a low maintenance, good property to buy in, but there are always little things that might need to be done here and there. So factor in that extra cost before property is rented out. So essentially, I think these are the main things that I wanted to cover here. So I think it would have given you an idea of how we operate, the processes and the markets that we are buying in. I hope it was useful, and if you have more questions, reach out to me, but I'll see you in my next video.